Hello, everyone. Today, I want you to forget everything you think you know about wealth. Forget the idea of luck, that only a few chosen ones get rich. Forget those ads that promise $1 million overnight. The true secret to wealth has nothing to do with luck and everything to do with a single skill. A skill that we all can learn. That skill is investing. But not investing as you see in movies, with people shouting orders on the stock exchange. Real investing is a mental game. And the great irony is that it's not about where you put your money, but about the mindset you have before investing. This is a video for those who believe investing is too complicated, for those afraid to start. In the next few minutes, I will give you the fundamentals of everything you need to know to start building your wealth from scratch. This is the first video in a series of 3, where we will break down the world of investments. Stay with me, because in this video I will give you the map to go from being a simple saver to a true investor, building real wealth for your future. Acronym: The Great Wall. Why people don't invest. Before talking about how to invest, we need to discuss why most people don't do it. The answer is simple: fear. Fear of losing money, fear of the unknown, fear of making a mistake. A study by the Federal Reserve of the United States revealed that nearly 50% of households in the U.S. do not invest in the stock market. And when asked why, the responses revolve around lack of knowledge and fear. We have been taught to work hard for our money, and the idea of risking it in something we don't understand paralyzes us. But here's the most important lesson from this video. Not investing is a bigger risk than investing. Inflation, that silent monster that eats away at your money, is proof. According to the World Bank, inflation has averaged between 2 and 4% annually in most developed economies. If your money is in a savings account that gives you 1% interest, you are losing purchasing power each year. Your money is becoming poorer while sitting in the bank. Not investing does not keep you safe. It keeps you in the same place while the world moves forward. 2. The first secret. Wealth is a game of time, not money. Now, the first and most important concept you need to understand: the true secret of wealth. It's not luck. It's compound interest. Albert Einstein supposedly said that compound interest is the 8th wonder of the world, and he was not wrong. Compound interest is the interest you earn on the interest you have already earned. It's a snowball effect. Imagine 2 people. Person A starts investing $5,000 a year at age 25 and stops investing at age 35. Invested for only 10 years, a total of $5,000, $50,000. Person B starts investing the same $5,000 a year, but at age 35, and does so until age 35-65. Invested for 30 years, a total of $150,000. Assuming an annual return of 7%, who do you think has more money at age 65? Person A, who invested less and for a shorter period has over $600,000. Person B, who invested more and for a longer period has just over $500,000. Why? Because Person A gave compound interest more time to work its magic. Time is your greatest asset in investments. Time, not the amount of money you have. A Morgan Stanley study on stock market performance over the past 50 years showed that time in the market is more important than the timing of when you enter the market. It's not about when you start, it's about starting now. 3. The beginner investor map. Before you put a single dollar into the stock market, you need to follow these 3 steps. This is your roadmap. Step 1. Eliminate bad debt. You can't start investing if you have high-interest debts. Credit card debt with a 20% annual interest rate is a bigger enemy than any market downturn. A study by Experian, one of the largest credit bureaus, showed that the average credit card debt in the U.S. is over $6,000. Those debts must disappear first. Step 2. Build your emergency fund. An emergency fund is your safety cushion. It is 3 to 6 months of your living expenses, kept in an easily accessible savings account. 60% of Americans cannot cover a $1,000 emergency expense. This forces them into debt, dismantling any financial progress they have made. Your emergency fund protects you from having to sell your investments at a bad time. Step 3. Define your investment goals. Why do you want to invest? To buy a house? For your retirement? For a trip? The answer to this question will determine your strategy. If you are investing for your retirement, which is 30 years away, you can take more risk. If you are investing for a house purchase in 3 years, you need to be more conservative. Your goal dictates your strategy. 4. The first act of faith. How to start investing. Now that you have the right mindset and a solid foundation, it's time to put your money to work. But you're not going to do that by buying shares of a single company. That's too risky for a beginner. The best way to start is with an index fund or an ETF. What is an index fund? It is a basket of stocks that replicates a market index, such as the S&P 500. The S&P 500 includes the 500 largest companies in the United States, such as Apple, Amazon, Google, among others. When you invest in an S&P 500 fund, you're buying a small part of those 500 companies. This gives you instant diversification. Over the past 30 years, the S&P 500 has had an average annual return of nearly 10%. You don't have to guess which company will win. You invest in the economy as a whole. What is an ETF? It is an indexed fund that is traded on the stock exchange. You can buy and sell its shares throughout the day. Where to invest? You need a brokerage account or a broker. Nowadays, there are very easy-to-use online platforms. Research reliable, secure platforms with low commissions. 5. The psychology of the successful investor. Major investment mistakes are not about analysis, they are about emotion. Buying out of fear, selling out of panic. A study by Dalbar, a research firm, showed that the average investor earns less than the market due to their behavior. They buy when the market is high, out of fear of missing out on gains, and sell when the market falls, out of panic to avoid losing everything. The key is to do the opposite. Buy when the market dips. Ignore the cost of commissions. Commissions can eat into your profits over time. An investment fund with a 1% annual fee may seem small, but it can reduce your total gains by 20 or 30% over 30 years. That's why low-cost index funds and ETFs are the best choice. The myth of the safe fence. Most people think saving is safe and investing is risky. The reality is that saving is a guaranteed risk. Money loses value due to inflation. Acronym. The power of DCA. One of the most powerful and simple strategies for a beginner is dollar cost averaging, or DCA. What is it? It is investing a fixed amount of money at regular intervals, regardless of whether the market goes up or down. For example, investing $100 each month in an S&P 500 fund. Why does it work? Eliminates emotion. It forces you to invest discipline, removing the panic of buying at the right time. Takes advantage of dips. When the market drops, your $100 buys more shares. When it rises, fewer shares are bought. In the long run, it averages your purchase cost. A study by the United States Investment Bank showed that DCA outperforms a lump sum investment 70% of the time. Investment is a journey, not a destination. Wealth is not something you find. It is something you build. And the building begins with the first step. The knowledge you have now is the most powerful tool you can possess. It's time to stop being just a saver and become an investor. We have reached the end of the first video in our series. Now that you know the fundamentals, it's time to move to the next level. In the next video, investment strategies, building your portfolio, I will show you how to build a diversified investment portfolio by analyzing different asset classes such as stocks, bonds, real estate, and more. And I will reveal the strategies that millionaires use to protect their wealth. Don't miss it. Subscribe and activate the notification bell so you don't miss the next chapter of this series. And if this video has helped you, please give it a like and share it. Knowledge is true power.